All right, welcome back everybody to another market day. I am your designated inquirer. My name is Axel, and today is 6/18/2020. It is Friday. It is the end of the week. We just went through a quadruple witching hour. What does that even mean? What do they mean when they say that? It means that today was the expiration date of quarterly options, meaning that for almost 2 years there were options on the books and what people bet on for things to happen to individual companies, stocks, bonds, all sorts of equities, etc. I'm saying a lot of the same things, but basically this is true. Commodities, everything got resolved today. People got their payout, etc. if they have been in it this entire time, right? So what does that mean? It means that today, usually, there's a high amount of volume, which there kind of was today, but also there tends to be a lot more volatility. But that didn't happen. And so we kind of have to discuss a little bit why. Because there were a lot of factors that were contributing to more or less the stock market wanting to just collapse under its own weight, and because it's been so frothy for so long, and because there's so many indicators shooting here and there, like telling us that, man, I'm just ready, just try and catch the falling knife, guys, ha ha ha. But it didn't happen. And if it did, there was a very muted response in terms of the bears. The bears did not show up today. And so you have things like Tesla being able to go up 4.4% when the NASDAQ dropped 1.23. But at one point, it had dropped considerably more. It had dropped almost 210 points. It had almost dropped more points than the Dow Jones, which is amazing. In and of itself, that the Dow Jones, which is 27,000 points, $27,500 per share, and that the NASDAQ is 10,000, is basically half its size, could drop almost the same amount of points. That the NASDAQ was dropping nearly at double the rate, basically did drop almost double the rate as the Dow Jones. Incredible. One, that the NASDAQ has been able to get to this elevation so quickly, but two, that it can drop as quickly, if not essentially faster, than what the Dow Jones can drop if the conditions are correct, which they almost were today. So what kept the market up? Well, it was a few things. One was probably thanks to Tesla. And well, how? Well, battery day. The looming, like, monolithic event that Elon Musk, people who are speculating the heck out of Tesla, etc., are putting so much pressure on the stock, so much fervor and excitement into it, thinking, hey, we could probably make a ton of money here if we everybody just hold on. Everybody basically adopted what people in Bitcoin have been adopting for so long, and you can tell that's the case if you read stock tweets about the stock Tesla. They're basically practicing HODL. Okay, a good portion of retail investors that are fervent fanatics of what Tesla is, if they're in it, will buy and will hold for dear life. Okay, the only thing that would probably get them to not buy and hold for dear life is probably outright fraud. But if that were the case, the stock would destroy them all. But that's for a later time, of which Tesla had been accused of a lot, but it hadn't really materialized. And Nikola is, and part of it is true, maybe just this much. In any case, let's take a look at what the conditions were of his rise and fall today. Now, as of 3:47 p.m. this Friday. Okay, let's take a look at what the stats are for Tesla as of the peak and the bottom. All right, as of the peak, we have a drop from the top of 16.78%. That is a minor contraction. Okay, that is a healthy pullback. All right, the initial drop of 42.43%, it was a heck of a doozy. What many were expecting basically for the general market is for you to be able to take this line right here and apply it right there and basically have it collapse, kind of like the way I have it here, to this level down over here. Okay, another almost 50%. Okay, to around 225. Well, that's if the Nasdaq does that also, right? Is probabilistically it can fall somewhere between 50% from this point and or anything less. If the Nasdaq goes and drops that much as well, which, well, it could. Anything can happen. But anyway, I digress. So, from the bottom, we have gone up 45%, which is also an incredible amount. Okay, essentially, we have gone up more than we've gone down, and yet somehow we're still below. But let's take a look at what happened on the internals. Okay, if we take a look at basically these, so you guys can see it, this bar right here showing the volume as a distribution of price, we have closed and built up a major position to this point of control. Okay, there's now been at least a few days, 3 days around this price action. Okay, so now there is basically a healthy consolidation around this price where multiple more days, like 2 days would have to be spent at 2 or 3 days, depending on where you're going, would have to be spent for it to switch and or change point of control. So what could happen? Well, considering how close the standard deviation line is here, there is a strong probability that we move up from this point. There's a strong probability, if this continues to be the point of control, and considering how this tends to act like a bell curve, there is statistically a higher chance of price migrating upward to essentially fulfill that prophecy of a bell curve distribution over a month's time. Is that a self-fulfilling prophecy? No, not necessarily. But generally statistics, that's how it works. Like, unless, well, it could be skewed. It could definitely be skewed, and it will almost always be skewed, but depends to what degree. Now, it's really close to this first standard deviation line. That's why there's a probabilistic higher chance of it moving over here. Now, how fast and when exactly that will happen remains to be seen, because we could take a dip Monday, we could take a dip Tuesday, and then build up momentum across Wednesday, and then on Thursday, after hours, watch together with the world as Tesla unveils battery day. Okay, battery day. All right, if you guys see me being a little overly dramatic, that's for basically the picture that's going to be on this video, because today I only want to make one. Today I'm making one because making 3 takes up a little bit more time and is a little bit more involved. So today I'm making one. So let's get to the other assets, etc., whatnot. Okay, all right, we're gonna take a look at the Nasdaq, what happened in comparison. Okay, in comparison, all right, which is /NQ, in case you guys are interested. For the Nasdaq, we did crash below major support. This is what I was saying. Today could have been the day. Today could have been the day where we saw another day like this day over here, which was this Thursday. That was what day? That was the 3rd of September. The 3rd of September could have been a repeat of today, where we dropped in one fell swoop, where we could have dropped a whole 6%. A whole 6%, 6% in a single day. That is an astronomical amount of points and percentage for an index. Okay, that could have meant basically another nearly 20% day down for Tesla if it wasn't for battery day, battery day, battery day. Okay, I cannot emphasize that point enough. And maybe a few other things were going on as well. Okay, for example, okay, what did not help also was that the bond market did not respond in kind. Okay, for it to drop and stay down, a subsequent increase in bond prices have to go up to absorb the money flushing out of the equities market. Okay, so generally when some equities dump, they can go into a few different places, either a different sector entirely. If it's all equities, it can go into a couple places, into bonds, into commodities, which could be gold, which could be Bitcoin, which could be silver, platinum, oil, etc. Okay, it can go into a lot of different places if certain sectors drop or if the entire market drops as a whole. But today bonds kind of dropped a little bit. Okay, so if we go to the 5-minute here, we can actually take a look at see how. Now, there has been a fair amount of support, as you will hear from Stephen Van Meter, the bond king, basically say that below 63.5, there's a fair amount of support that will keep this thing from falling further. You can kind of trip up a little bit, etc., but there's enough demand for bonds to keep it above this price. Now, the point of control is actually above this, and there are other points of control that are almost substantially higher that could vie for its attention if we were to visit them. All right, that could happen. It could happen. And we're also, statistically speaking, if we spend another day maybe around this price point, we could see either a shift in price point control, or price point of control shift downward if we stayed on here, in which case we could meander lower because the bell curve, we're technically below the standard deviation. Okay, so, but in the opposite sense, because we're not within the bell curve and we're below the point of control, what could happen is that there could be pressure to lift the price of bonds up into the standard deviation of prices, right? That could very well be a possibility. And this is where the strength of mean reversion tactics comes into play, because the statistically, these are strong things that can happen, that can prove true, but also could be false. Could be false because with statistics, you have a chance of something happening and a chance of something not, whether it's a small and or a large percentage, right? So in any case, let's move on. So we did see what happened with bonds. Basically, bonds fell, and so it basically let out more money into the market where it could be available to buyers to shore up equity prices. Okay, because what else can happen is also that money could be thrown out into the market and it could go into commodities. But today it didn't. Today gold went down. Today Bitcoin went down. So there was probably a fair amount of money that went back into equities where it could basically serve as a stopgap for the increasing momentum to basically go to the downside. So next week we have a series of we have one event that could potentially shift the market upward, at least momentarily, for Battery Day. But apart from that, the following week we have October the 1st. We have the end of the month and the start of October. But October 1st is when payment protection plan protections for jobs ends. Okay, companies are now free to fire, furlough workers at will and are no longer bound by law to hold them employed because they have now met their requirement to be able to receive money from the government. Okay, so we may be seeing a sharp increase in unemployment starting October 1st if there is no stimulus coming from Congress. And basically the board remains the same. There is still not all that much incentive for both parties to work together, considering that it is an election year by both the Republicans and Democrats, that Democrats might not be inclined to help the president because he is of the opposite party, but also from Republicans because it is their ethos not to be stimulative with money from Congress. They prefer not to spend money, to restrict spending, and to lower taxes all at the same time, which we've been doing, but it hasn't necessarily helped. I digress. That's for another video. In any case, that's where we are at. Okay, generally the other markets followed some version of the same combination of events, where we basically did move lower, where the S&P 500 fell 1%, the Dow Jones fell 0.77, and the Russell was the one that basically came away nearly unscathed, with falling down 3.3 points or 0.21%. So I would also encourage you guys to go see Steven Van Meter, the Bond King. He's going to be producing more content soon, and he explained things very well, very thoroughly, and his increase in production of content is also going to be amazing because we're going to be able to learn so much more together. So while I am studied in the arts of the economy, there are still finer points and finer things to particular indicators and stuff where I don't know as much. School can only take you so far. I fully believe in lifelong learning. I fully believe in being able in becoming a master over time. Don't let anybody tell you that because you don't know something today that you cannot know it in the future, or that in and of itself makes you not intelligent. Bah humbug. That is false. Don't let anybody tell you any different. All of us basically have in the power of our hands nearly all of the knowledge in the world at our fingertips. Okay, we can recall any piece of information. It's knowing the significance of the information and how to use it that makes, not even knowing what it is or how to use it, because even that part we can learn. Our capacity to learn is what makes us intelligent. Maybe in our creativity as to how to use it could be some indicator of intelligence, but even that, with that, I'm going down a rabbit hole that is not all that important, because we're all capable of getting to understanding, of getting to a place where we can be effective. So with that, I leave you this Friday, and I can possibly come back on Sunday, depending on what time I get back, etc., to produce a video along with Steven Van Meter after I see his video, to try and break down what is going on in the futures as they open Sunday night. That was a lot. Well, in any case, it is now a 19-minute video, and I bid thee adieu. Please take care of yourselves. Please stay healthy, stay safe, keep your distance, wear your mask, be awesome to each other, and take care. Till next time. Bye.